Nuro went up from $3.26 all the way up to $38. And a lot of people are wondering, how did I miss it? How can I catch it? And did you trade it? Well, I did trade it, and I want to show you my chart right here. I'm going to be going in full detail of why I traded the stock, what I was looking at, and how I avoided a big blow up that I know a lot of traders probably faced and maybe even blew up their account. Let's go ahead and look at Nuro. If you look at the stock itself, it went from $3.26 all the way up to $12 on this first day. And on this first day, I didn't even touch it. In fact, this is how it got on my radar. This next day is the day that can easily blow up a lot of accounts. And here's why. So many traders just see a stock that is up from 3 to 12 and they immediately go, oh, this is going to be easy. It has to go down. It's up so much. It's up so much, right? That it can't continue higher. Well, let me show you something. It definitely did. We went immediately all the way up to $38 the next day. And this is something that you need to be aware of, that you got to be careful that this can happen. You don't need to say to yourself, it can't go higher, because it can go higher. One thing that you always want to check out, especially when you're new, is you want to check out the float, because it can give you an indication of whether or not the stock can go parabolic like this one did here. And if you look at the float here on FinViz, the float for Nuro is 3.77 million, which is very, very low, because when I show you the chart in a minute, you'll notice in the first minute on that second day of the run up, it traded 2 million shares in volume, which is crazy. And not only that, but if you look at the news, which at the end of the day, the news is not everything, but there's people behind this. It announced that they had a breakthrough on fibromyalgia. I can't even say the word, but they had a breakthrough, and a lot of people see this and it has a story, right? If a stock has a story, it has momentum, and it has a lot of volume, there's potential that we can really become erratic, meaning we can be erratic to the upside and to the downside. There's price action for both sides of the coin. So you got to be aware of this, and you need to size in appropriately. So looking at this chart, we see on the first day we went straight up to $12. Now if we go ahead and zoom in, we're going to be focused on these 2 days, because this is the day I actually traded it, and this is the day I noticed it and put it on my radar. And so pre-market and after hours is what I was paying attention to, because remember, I'm looking to trade on this day. And I actually took a couple of losses, as I showed you at the beginning of the video of my chart, but here it is again. And I was able to switch bias, and that helped me. And also it helped me understand what people were feeling. And I'm gonna explain that here in a second. The first thing I noticed, I like to draw my own lines. I don't use any indicators. So if you're gonna ask that question, just know that's the answer. And I noticed right away, we're in a little channel here and we have somewhat of an uptrend, or you could even say that we like build up an uptrend, channel, break, right? We just did that twice. In pre-market, when I noticed that we were breaking up to the upside, that made me interested in potentially a short, but being very, very careful, although I knew we were still a bullish sign, because this was very, very bullish. I have to admit, it was very bullish. But at the same time, I was thinking, you know what, it is up a lot. But even though it's up a lot, I'm going to play it very safely. I'm going to watch it at the open and then let the price action dictate what I should do. I wasn't just going to short it right away, and I wasn't going to long it either. Especially wasn't going to long it because the stock was already up a ton. If a stock is up so much and it hasn't gave me consolidation to risk off of, I'm not just going to long it anywhere on any breakout. But it doesn't mean that's not a bad play. It just means it wasn't for me at that time. So when the stock actually opened, we'll zoom in here on the 1 minute, you'll see that for a brief moment, we opened and we rejected the high a day of pre-market. So I took a short right away. And when I did this, I was risking very small, a quarter of my normal size risk. And I got stopped out within the next minute because it started to really run. And you can see once it stopped me out, it halted. And I got very lucky, but that's why I size in accordingly. I size in much smaller on a move that I know has a low float. We traded 2 million shares on the first minute, and before that we already rotated this float all pre-market. So these are things I'm noticing, and these are things I'm accounting for when I'm going to place a trade. So when I placed that short, I was like, it's not the best short, but I am going to take it because if you look on the daily, there's so much room to the downside that I thought the risk reward was there. And that's what I'm thinking about. But once we halted up to the upside, I decided this is not for me. I can't really gauge where risk is when it starts to do this. So instead, I want to wait for it to settle down when it starts to do this. Consolidate. Show me a trend. On the 1 minute, you'll see there's a little trend forming that really made me take note. And this was after, we started at a couple of hours of consolidation, spike, failed, and we held this little trend line here. When that happened and we popped back up, I thought there's a possibility this could be a potential buy. And I was still aware that it's up so much, I'm going to be careful in sizing accordingly. So I actually bought on this dip here. And here's the thing, I'm buying on a dip. I'm not buying on a straight up spike. I'm buying on a dip because I got to be very careful. And I was buying right here at 25, risking 25-ish, and I had 25.20 as my average. And at the time, whenever it tested 25 and bounced, I thought, you know what? It shouldn't break below that because if it does, let me explain something. If a stock has a small float and volume is massive, it can really panic or skyrocket, as you saw earlier when it just halted up to the upside so many times and went straight up to 38. So because of that, I sized in accordingly, and I'm going to cut it very quickly because I got to be careful until I get a for sure sign. And if you look here, when we barely broke it right here at this moment, I got out, didn't even question it. And in fact, I flipped and said, you know what? This is the time to short it. Big picture's on my side now. We're starting to crack. And I actually got stopped out. It's very erratic. It wicked me out. And when it wicked me out, this is something you need to note. If you were watching the price action, it wicked and huge. It rejected very quickly. And at that moment, I sized in half of my position right away and then sized in more on the pop here and then rode it all the way back down. So here's a couple of things you need to note. I got stopped out at the open, right? It's the first thing. And when I got stopped out, I sized in appropriately, very small. So as a trader, you just need to know, at least for me, risk is so important. The second thing is I switched long. It didn't work. That's okay. But I had an idea, I had a plan, and I got stopped out. Doesn't mean I'm going to just be like, oh my God, I'm done. But the next thing is when it showed me that it was looking weak, I decided to flip back short. So I'm being flexible. Now, in this instance, I was wrong on all three of those beginning trades. However, they were so small and the risk was so tight that it wasn't detrimental to my day. And in fact, whenever I sized in after this wick, because this wick was a sign. What is the sign, you're probably asking? Well, let me tell you. When there's a lot of traders who are long something or short, in that area that I was getting out of with the wick, it's an area that's important because most people may be using a stop there. If you look, this area is important. We couldn't break above this area earlier and actually acts as support here. Resistance, resistance, and then we tried to break over it and had a huge rejection. If you look on the 1 minute, you'll see that rejection is pretty big here over the past, even couple of hours. We had a huge rejection with volume behind it. This told me, Alex, this is the time to jump in this. So I sized in on that, sized in more on this pop, risking right above that. And then I covered a small piece. Why did I cover a small piece down here? If you're wondering, what are you talking about? Look at the chart. That's my executions. I cover that small piece because if you zoom out, you'll see there's some support all in this area. So I'm covering in this area. That's why I covered a baby piece. Because I've already taken a couple of paper cuts, I want to make sure to cover a big piece for the move. And at the time, I thought the move was going to be all the way back down to the low 18s. I didn't get that because I covered right at the close. I don't like to hold after hours. And you can see here at the close, I was out in the 20s and 21s. That ended up being a good trade for me, and I just want you to really realize you gotta be careful. If you trade anything like this, you need to size it appropriately. Don't oversize until you get that slap in the face sign that says, hey, you gotta get in this, and you gotta get in this now. When I saw that, that's when I sized in. So if you like this type of content, please be sure to like this video, subscribe, because if you like the video, it really helps me with the YouTube algo and inspires me to continue to do more trade recaps like this. Thanks.